But even at 67, 66, I'm a little bit cautious in this market. You've got the S&P 500 down on what arguably should have been good CPI news. Is this recession concerns? So just something to think about. You got to stay vigilant in this market because, again, we are, continuing this uproar in the S&P 500. However, today's day erasing this little bounce here, we could see a takeout of the lows and continuation of this sell-off. So I'm just being cautious. So I'm stayed cash. I also shorted the Nikkei, which is actually going pretty well. I'll pull up my EWJ position. We're up $677 on a day that the market's down. I will take that all day long. So it's a small position for the account, but $690 or whatever of profit, I'll take that. I also, just to get fancy on it, probably too fancy, probably stubbed my toe with this idea. I actually also sold a put at 67, which means I capped my downside potential on this one, but I sold it going into CPI. So shoulda, coulda, woulda not done that because 67 means I capped my upside to right here, but I collect a premium. 67's right here. So I capped my max profit to this point here, basically, minus my my premium collected. So let's call it, I think I got 60 cents of premium on that. So, 66.40 is my max profit. At that point, I would, not be able to, but that goes out to September 20th. So I got like 9 more days on it. So we'll see. But anyways, guys, we're going to bring into the conversation the man, the myth, the legend. We'll be talking to Chris Pulver here in just a moment. Before we do that, let me just mention that you're going to see in just a second a promo for the new Pulver Alert service where you can actually get the trades that Chris is taking shared directly to your phone or your desktop. You can also sign up for our VIP group. So we have 2 different services here. You can take your pick. If you'd like to get access to the A1 Trading VIP server and get access to our Discord trade alerts, you can do that by sending us a direct message. We'll drop the link here now in the chat to speak directly with a member of our team about the different options that we have. If you're already a member with us in Discord and you'd like to get access to the Pulver alerts, here's how you can get access. Send us a direct message. Someone from our team will help hook you up with that new Pulver Alert service. We've got a lot of people who have already joined his service, which is really exciting. And we've just launched that. It's our first kind of new addition to the Discord in a while. So we're really, really thrilled to get that set up and trade alongside the man, the myth, the legend, Chris Pulver. So stay tuned. We'll be right back with Chris.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey, everybody. What's
Chris,
happening?
Sorry, I'm here.
Hey,
I just want to say hey to you for a second.
Sure
Hey,
did. Wild start to the day, huh? I'm looking at a 5-minute chart.
Yeah.
This is nuts, dude. We've literally started 96 all the way down to 21, like 70 points straight red on the 5-minute chart. Pretty impressive for a CPI reaction, huh?
There's a lot to unpack there. Yes, I think it's very interesting because should have been a good number, right? 2.5. That's not bad. 2.5%. We're getting real close to targets here. But I think I've been trying to unpack this in the stream here today.
Yeah.
I think what might be concerning the markets too is that, okay, you've got oil slippery slope falling down. You've got the labor market data, which has not been super impressive. I think there's a potential here, Chris, that we may be seeing this weak CPI print spooking investors a little bit. Why did the forecast slip down to 2.5? Yes, it's good news, but remember that inflation can cool off dramatically if the consumer is cooling off dramatically, if prices are not rising because people aren't spending as much money. I don't know. There's something's not right here, because again, a couple months ago, a CPI print miss or down to 2.5% would have gotten this thing kicking to the upside.
Yeah, it was Frank actually pointed out. I saw that yesterday. Was like, hey, it just printed 2.5 for the forecast. I'm like, that's crazy to do that yesterday.
Yeah.
Did you also notice the CME watch tool? So I was in a session right before this, and yeah, I mean, I'm sitting here like, look, we have some structure. If we have, clearly the market was directional. I ended up putting in a center trade right in here that I ended up bailing and taking the loss. But this is also the difference between today's open. By the way, this was yesterday's open. That was easy pickings for profit. This was Friday's open. That was easy profit. Thursday, easy profit. And then today, not even close to the same. So it's just like the market's like, no, we're going to go crazy on the day. So what I ended up doing, I shared this trade with Frank yesterday. I have a dual butterfly spread, and I posted this in the alert section for A1 Trading. So I did share this trade.
Yep.
In fact, in my section here, let me go into, where to go? Discord. There we go. And I'll go into my section. I believe I put it in as a futures trade. Where's my section here?
Scroll down a little bit.
There we go.
There you go.
Okay. This is the trade that I'm in. This could be my saving grace for a potential payout today. So I basically put on 2 butterfly spreads. I share the image down here with what the trade looks like. The expiration is today. And so if price is in either one of these profit traps, then there's potentially to pay, 10 to 1, which the total debit was about $6. And this would be about a $30 credit max profit. So, I mean, I can certainly make up for the net debit and have one trade pay, but here's the live look at that trade. Let's go to Thinkorswim. Here's the live look at the trade. So if price continues to push lower, right now, the shaded zone you see in gray, this is now the expected move of the S&P or the ES feed.
Mm-hmm.
So if price does get into that expected move, I mean, anything in this profit trap, this 545 credit, this is now trade. This is a debit in real time, but that's if you took the trade now. I'm going to look and see what it's trading for as an overall credit, because ideally what I want to see is, okay, I know that I paid $6 for both of them. So this is $3 here and $3 here. I'm scribbling like crazy, but $3 here and here. If I see this trading at, let's say, I don't know, I mean, like $15 is pretty good. $20 is pretty good. I might end up managing some profit if it comes into that peak today. So even though I took a small loss on a strangle trade, I might have this as enough volatility to get me something that's good, something that's very profitable, and it's a low risk, high reward strategy, and that's what I'm monitoring. So right now, my overall positions, P&L, pretty manageable. I don't know what your drawdown situation looks like with a down day, Nick, but I'm only upside down like $5,000. No, it's not a big deal
because I'm super cash heavy.
Are you? Okay. Well, and that happened like last week, right? Like that first week kind of stopped out a lot of positions. Yeah.
Yep. Good. Which has been the right play. It's been, kind of actually the right play on like where I was heavily exposed, which was SMH. I stopped out on that one, which saved me probably a big slide of like 6% on that position, at least on the allocated money there. But yeah, no, I'm looking at it and I'm thinking, I just think that with the September seasonality, with the election, with the labor data cool, I'm just cautious. I'm not outright bearish. I think that, rate cuts will be good for the economy, will help things out. But I'm seeing some warning signals. One of the big warning signals I keep coming back to is that slide in oil makes me a little bit nervous about where we're at globally. That's telling us something, because as you were joining here today, Chris, it was like, okay, oil's down dramatically, but it's not like we had some big peaceful resolution in the Middle East or a peaceful resolution in the Ukraine. So the supply side's not changed all that much. It seems to be slowing demand. And also OPEC themselves actually cited slowing demand for oil. So you're getting all these signals that, okay, demand for oil is wavering. You have to ask why. And oil holds the key to the castle so frequently in the markets when it comes to, the global economy. Like oil
Yeah.
is almost a good signal of where it's at. You just have to kind of filter out some of the wars and supply issues that can muddle that, you know?
Just ignore all that stuff going on.
No, right. No, that's not what you know what I mean. Like
Yeah,
just
yeah, yeah.
the demand for oil, not just the demand side of oil is very important. The supply side can be impacted by wars, and obviously we want peace in the Middle East always. Like that's a terrible, sad situation. But
Yeah.
from specifically the market's perspective, it's like demand for oil or the lack of demand for oil can give you a good read on kind of global economic health. So just something to keep an eye on. I do still have, like I said to you the other day, this short position on the Nikkei, which
Mm-hmm.
has been in and out of profit, not gone too far anywhere. I'd like to see if we can take out those lows. I could start trailing a stop on this one, but uh, just trying to stay mostly cash heavy. See if we can get a bigger rip to the downside. In which case, I would look to slowly start picking up and deploying stuff. I sold some puts on some stuff. Here's where I'm currently selling puts. So I sold puts on Nvidia at that 95 price that we've discussed the other day. I sold a put on Google. I sold a put on Exxon. So got some puts floating out there that I've sold, and still long gold, still short EWJ, which is the Japanese stock market, and sitting on a whole lot of cash in the meantime, just kind of waiting to see what happens.
I like it.
Yep.
Yeah, I mean, I see. So this is a currency strength chart, the Japanese yen. I had a chart alarm go off overnight with the Japanese yen future, so we did poke those recent highs. That's a crazy amount of volatility yet again on the yen. Up to the top of the food chain, all the way back down to baseline, all the way back up again as the market opened up. Yeah, it was an interesting reaction to CPI. Like you said, it. I mean, initially I was watching the futures market. This was the CPI print right here. So CPI market reacts down, comes right back to the weekly VWAP, pushes up here, and then just freaking dumps. So there's
Mm.
clearly some manipulation going on. I mean, look at this. This is the ES. I think this is the ES feeder. Is this the? I think this is the NQ over here. This is the NQ. Okay, so this is Nasdaq. If you look at this chart here, Nick, you would say it's pretty simple that we're in a downtrend, at least for right now. Like there's all this level. We're making lower highs and lower lows, and so even today right into this cluster of support, and price just reacted from it. So,
Yep.
we look at the NASDAQ heading lower. Your puts that you have, those are looking good. I bought the MNQ at 18,000. So if we start to see, IV swell a little bit of risk off trading, Frank might get his volatility play that he's after. I know he's long the
Mhm.
VIX, so that's got to be elevated a little bit today. It's back up into the 20s, so we're up 11% of the VIX today. Uh,
Did he tell you about his SPX 5500
4
yesterday?
points, right? He was just by his chinny chin chin, right?
Yeah,
4
I
points.
was watching him right at the close. He was watching it to see if he was gonna get max profit or not. But yeah, it should be interesting. Also, I think he may join you in just a few minutes. I got to hop off, Chris. I got a podcast. I'm late too, so
Okay.
um, I will catch you up on the next one. Guys, just a reminder: if you'd like to get access to Chris or my signals, all the information can be found chatting with directly with one of our members of our staff who can set you up with a membership. If you'd like information about our signals, please send us a direct message here. You can get access to Chris or myself. Just chat with us, and someone from our team will help you out. All right, Chris, you got the show for a little bit.
All right. Thanks, Nick.
All right, see you, man.
Cool. All right. So pretty wild day to the downside. I did have some gaps to show. Let me go back to this software here. To the downside, SPX is filling in, looking like we're going to fall towards 5,400. That is the close from the 6th, which would have been Friday last week. So we had Tuesday directional day last week, Wednesday, Thursday indecision, Friday was a down day. It was choppy, but still like a down day. Finished around 5,400 on SPX. That is actually the gap that we had a Monday open. So this, oops, I'm using the wrong color. Let's go. So that low looks like we're going to get tested. This gap has completely filled from this route today on CPI. Now, obviously, the market, if we start to break those lows, then we are more vulnerable to the downside, which I don't think should really surprise anybody. What did I talk about yesterday? What did we talk about yesterday? Let me get into, there's one workspace that I want to show you. This is the same workspace, so I can switch this one out. So there, oops. Yeah, so I've got my live data feed for futures. We are just falling off a cliff S&P down. I want to show you that that really simple. Get out of here, bro. Where's it at? My Simtech. This one with the 200 EMA. This is what we talked about yesterday. Okay. Now, if it finds the 200 EMA, this is on the S&P 500. This is a SPY. If we find the 200 EMA, or I'll just say this, even if we break, right? Even if we break the lows, it just makes it easier for price just to be the path of least resistance right now is to the downside. So if this is there to there, I mean, there's all sorts of ways to kind of splice this up. But if it's connecting the lows and the highs, okay, or it's something like this, I'm just looking to see. I expect price on the S&P at 200 plus bars on the daily overstretched. I think it is easier for price to find the 200 exponential moving average. Okay. So that means that right now in the short term, I would be bearish. I would be looking to stay bearish. So I mean, if Frank's had the right idea with some bear call spreads, I've got some hedges in. I've got some long puts going. I have some broken wings, and all my broken wing butterflies are up here to the upside, right? So those are some profits. As long as price goes lower, those all get paid pretty nicely. Bear call spreads get paid pretty nicely. You know, did everyone see what happened in JP Morgan yesterday? Their guidance moving forward was a little bit off, saying they were too optimistic on some of their earnings expectations, and so JPM, which was one of the best financial performers this year, was down like 7.5% yesterday. So yeah, I mean everything's looking pretty darn bearish right now, and that's quite the drop. I mean, point wise, from high to low, we're talking about a move, about a 1.65% move. That's big, right? I mean, usually this market lives within a half a 1% move, and we are seeing some heavy pressure to the downside. So it is what it is. Like I think this is fine. I'm looking at my my overall P&L. I'm getting some drawdown today. That's okay, but I have some hedges in here that I want to keep an eye on. So my ES. What do we have here? Oh yeah. So one of these is getting in the money. Let me check that trade here. Okay. All right. We're cooking with gas now with this little butterfly spread. So if we have a horrendous day to the downside, let me check the points right here. This would be right around 53.95 was my pin price. So if we hit 5,400, I would obviously like to see price kind of linger around here. I'm going to do my best to manage some net profit. If I can walk away with like $10 to $15 net profit today, I'm going to be pretty stoked about that kind of double butterfly spread. So I'll be monitoring this. This is pretty much going to be my intraday task for the day is just monitor this. I have until 5 p.m. Eastern time when the futures market closes. But anything at like 2, 3 o'clock in the afternoon, if it's down into this this low point, this is good. What I'm trying to avoid is hey Frank, I've just finished up my little butterfly trade here. What I'm trying to avoid is if price goes so far down that it actually gets through my profit trap. So if price goes far enough that it's then on the other side of my profit trap, I'm trying to make sure that I'm at least protecting a majority of the profit when and if I can. So realistically, right now this is added up to about $7, and I paid $6. So I cover the cost of my trades, but obviously I'm not happy with that profit. So what I'm going to look for is see if price wants to go lower. If this is trading in the double digits where I'm getting, I'm hoping like $16 or more would give me, that would be a $10 credit total, $10 credit. And this is at a 5 multiple. So it'd be, let's see, a $10 credit. I'd be up $500. It's a 50 multiple on the ES feed. It'd be 5 on the micro. So I'd make $500 if I get into my profit trap today. And this can show like $16 credit or better. So, all right, Frank, what's up, dude? How's your VIX? How's your VIX doing? How's your bear? You got another bear call spread in today? You want to trade? What are you doing?
So the VIX is up pretty nicely. It's at $3.06. I got it for $2.50.
Okay.
So nothing crazy. It's like 22% up on the trade. I took a bear call spread on the S&P again at 55.15 this morning. So that was the threshold. I got it for $1. Unfortunately, though, I took a bull put spread. At 54.30 was the threshold as well. But it blew way past that. in the past like 15 minutes of trading. So right now, one is near full profit. The other one's at a pretty steep loss today. But I wasn't expecting a big reaction. I was kind of expecting a muted one. I don't necessarily think we're gonna have like a super hard sell off today. I would love one because I have like a lot of big I have the VIX plays and then I have out of the money puts. So that would be nice, but I don't necessarily think that it's gonna sell off as hard as we think. And even today, if you go out, you look at the S&P on the daily chart. So we're down 1.4%.
Yep.
I mean, this isn't saying much. I don't know. We haven't broken the lows of
Friday. It was Friday's low.
Yeah, Friday's lows.
Yep.
What we could do here is just create like another bottom. We could create some sort of higher low and maybe it'll turn to some kind of wedge pattern.
We could do this again. I mean, if it's going to be weird, we could create like maybe Friday's candle could be like another box if price gets like a little testy in here. But if we break through the lows, I mean, okay, fine. I don't know. I mean, again, is like, does it fall through the lows and then just dump to the downside? Probably not. If we just fall here, retest, or fall here sideways, and there's just pressure. I mean, look, I keep going back to that 200 EMA. It's down there near the August 5th lows. I don't know if the market's going to use it as a level, right? Like use it as a level just to jump up and be like, I mean, to me, it's a buy zone. I think that's probably my next obvious buy level is if we find this 200 EMA, I'm going to put in some bull put spreads. So are you doing more bull put spreads like aggressive based on this current position?
This was the first one I've done.
First one, okay.
I'm already regretting it, but I think I was saying yesterday I'm limited on the upside in my opinion. I think if we go higher, it's not necessarily going to rip higher.
Agreed.
So that's like what I was thinking. I'll just sell calls or sell spreads at those highs or a little above.
Yep.
And likely price won't break that level. And so for the third day in a row, it's been correct. But I was also thinking that, yesterday came so close and I thought I was so in the clear that maybe I should, protect myself a little bit. So I went pretty far below yesterday's low and that ended up breaking. So
what's your line in the sand then? What's the bull put spread line in the sand?
54.30.
So it's below that now?
It's at 54.13.
Yeah, I know. I'm saying so you're below your price now, right? 54.30 is your sell put?
Yeah, I'm like 15 points below it.
Okay. Well, that's not good. Yeah, that's not good. You're 5 points wide, I'm assuming, right?
Yeah.
Okay. So
it would be a $4.90 loss.
Oh, okay. Yeah, I mean, I just look at this. This is a very decisive move. I mean, this is still the 15-minute time frame. We're an hour and 12 minutes into opening bell. This market is just pure downside. Now, again, doesn't mean that it's like it's obviously a nasty day today. Like there's no getting around that. This high to low at 1.6% high to low. That's a big drop. Okay. However, this support from Friday is still there. So I'd say there's a chance that the market maybe doesn't make any major damage play to the downside. But if we do, I mean, I think the easiest play here is, I'm going to stay away from like the catching the falling knife situation just in case this does breach the floor. But what I would say is if we do break these lows, then this fade. I will probably be intraday short on option or on the futures market, looking to try to stay with this overall move until we start to see those bigger timeframes hit those the EMA, the 200 EMA.
Yeah, I think if we wait till if by midday price comes back up, like say third of the way or so, I
Yeah.
might just sacrifice that day trade and just close out for
Close it.
small loss, break
Yeah.
even or whatever.
All right. I'm gonna set a chart alarm at 50. This is SPX. Let me go SPX. I'm gonna set a chart alarm at 53.95 because that is my pin price on my ES trade. So 53.95 there. And then on ES, 53.95. And I will check and see what it's trading for. So if that activates that alert, I'm coming right into Thinkorswim, and I'm going to look and see what this credit situation is trading for right now. So on the put butterfly, this one's pretty much worthless, right? Or I'm sorry, the call fly is pretty much worthless because price is, likely never coming up here. This is the expected move now based on the current range, which when I started trading this morning, it was expected to be like a 38-point move. It's probably doubled that. What's our move on the day thus far? For the day, we have a high at 55.07. This is ES feed.
We moved
55.07 to the low at 14 or
like
15.
80 something
Yeah,
points.
we're like 85 to 90 points on the day. So this market is determined, dude. So anyway, I like this trade. I think that if we break the lows, I want to see this, Frank. If we bounce, like you said, if that allows you to get out of your trade, right? Like I do see some good structure here. These gamma levels or maybe stopping, kind of containing price around at 5,400. But if we blow through those levels, then any type of rip we see, I'm just going to look at, pullback to fade, pullback to fade. And obviously I just want to keep like broken wings. I might even do this. I might do a broken wing butterfly up here and just say that we're likely not going to take out that high. So I'll play around with some of those kind of income plays. I might do an SPX and NDX trade for that, or I'll get into the futures market and I will grind a little bit lower intraday.
Yeah.
So, but yeah, we're stalling right around that Friday low for right now, but there's still a lot of trading left in the day, where it's not even 11 a.m. So a lot of trading left in the day. But yeah, let's see if we breach that 5,400 zone. That's a big one, man. And if we do, well, my current value is around let's go SPX. My current value is around 51.76. We've got the August low at 51.22. I don't know. I don't think it's that hard though. I mean, I think right now, if we're trying to like aggressively trade and stuff like that, that's fine. But I think the easiest trade is if you want to establish some clean direction, that we just look to buy in here in the short term. And that's kind of the line in the sand I think the market would like broadly respond to. If I think so, but define risk trade in my opinion.
It's hard to tell because, I mean, what do you think caused this sell-off? Like the inflation?
No, I think
CPI
this.
year-over-year?
I don't. Do you think this has anything? Do you think price action today has anything to do with inflation? Because I don't.
Yeah.
I don't.
I do think so. I think I'm just confused as to why.
Well,
because after the report,
yeah,
we kind of had a sell-off, but it was more so like a muted sell-off. It didn't really move. And then all of a sudden it picks up towards the end of the hour.
This is the feed right after the news. So we dropped lower initially. That was the initial reaction. So we dropped lower, ripped up here, and then we've been fading all morning. So we dropped, ripped up here, faded all morning. I think that the direction itself is not necessarily CPI influence. I think CPI just gave the market a false sense of hope, but the reality is we're still putting in the reality of like last week. Last week employment news was bad. I mean, like financials. I mean, a lot of the banks were going back. I think that the Federal Reserve or like the big bank, I think they cut their asset requirements from like 19% to 9%. So that should actually mean like more money and more reserves for banks to do what they want. But that was like it was a negative reaction or adverse reaction. Like JPM dropped like 7.5% yesterday, which was keeping pace with the S&P. It was up like 33% this year, and it's fading a little bit off those highs. I mean, we're still pushing down today, man. So I just think right now it's It's an aggressive way to have like path of least resistance, September effect, you name it. And I just think we're overstretched. I mean, I'm not trying to make this whole narrative really complicated. Once we came down towards the 200 EMA but didn't hit it, we're still pretty stretched. Where I've got a lot of history that shows anything over 200 bars, it's easier to find that as balance. So I'm looking to be short right now, at least in the near term, or just protective.
I am
So,
too. I
yeah.
guess I misjudged how heavy this move could have been today.
Sure.
But
it uses the news as an excuse though, Frank, right? Like a day like today when it's like it's just one news event, but look at what it does for like the broader flow of liquidity. It uses it as an excuse to just like pump the markets full of something. And that something today is bearish price action. So we have a lot of those where it's like, last week it was all employment news and we had a Tuesday, Friday. That was a pretty aggressive directional move, considering Monday was a holiday. It's like the market came out swinging for September. And then like yesterday was really quiet. Okay. Tuesday was really quiet. And then today, not so quiet. It was just a news event was enough to kind of galvanize the direction. So I don't know, but it's not really changing anything from the pace that was set last week. Last week started with a bearish tone. This week is just more the order flow is kind of proving the same thing.
Yeah, but still at the same time, this isn't a scary drop in my opinion. We haven't really moved that hard. Like this can easily get taken out and come all the way back by the end of the day. Even though I don't think that will happen. Yeah. I mean, I've been surprised before by how the market reacts.
Sure.
So I mean, unless we get if we get above a 4% drop in a day, I think I'm going to be more worried.
I mean, I would too, because we're talking about the stability of like, we haven't seen anything outside of like 2% intraday.
Talking about the Nas though.
I know. I mean, I get it, but that's, if we had a 4% on the Nasdaq, you're going to have 2.5, maybe 3% on the SPY or on the S&P. I mean, look, the Russell is hanging in there 1.86 to the downside. Qs are 1.5. S&P's down 1.6. Dow's right there 1.69. Like everything's pretty much correlated down. Nothing's really worse. But it's interesting that the S&P is worse than the Nasdaq right now, and the Dow is actually worse than the S&P as well, slightly. So yeah, we'll see, man. I mean, this is a good way to watch price today. We're right back down to Friday's low. So if there's a bounce, now's the time. If there's not, then this could get a little bit uglier on the day, and we could have a 2+% day to the downside is going to do some damage because it's going to take out Friday's low. So yeah. I mean, look at the Dow. We're at fresh low. So Friday's low on the Dow got taken out. Friday's low on the IWM or the Russell got taken out. Friday's low on the Nasdaq did not get taken out. So I mean, one thing that could happen today. Nasdaq keeps coming lower, tests the lows, and the SPY takes out the lows. Maybe the Nas takes out the lows. So there's a couple levels I'm watching, but what's that?
Need the VIX to keep climbing.
I know you do. What? So by the way, what your VIX is what again? You have like the 17 something call, or did you buy out of the money?
I got a $17 call expiring October 2nd.
Okay. And I mean, you should close. You'll be able to close if we get a big rip in VIX. You'll be closing it out, in the near term. But yeah, $17 call. That was that the 233 or something. 230 debit.
It's 250.
250. Okay. So is it showing break even right now? What's it trading for? Because the bad thing about the VIX is it's not intrinsic value.
It's trading it's 28% up on the trade.
Okay.
So I got it 250. It's at $3.22 now.
Okay, good. Cool. Well, I hope that, I hope that we're actually, I'm just going to set a chart alarm here at the highs. I mean, for your sake, it's going to make trading a little bit interesting if we hit 24 again on the VIX, but that'll be good for your trade. So I do like that.
Yeah.
All right. This is a wild day, dude. I mean, 1, 2, 3, 4, 5, 6 15-minute candles in a row. That is straight. So 15 times 6. We had 90 minutes of straight selling today. If I go to the 5-minute chart, which I was watching this morning, oh my gosh, this 5-minute chart, look at this thing. We had like 3 little breathers here, but this thing is just pressure to the downside like crazy. Let's see if I'm going to put a SPY level on here.
I have this weird feeling that it's just going to come back.
Yeah, well, don't trade feelings, dude. It wouldn't surprise me if it does, but I don't know, man. I mean, this seems like a lot of pressure to the downside just to be like, yeah, we're just going to rip right back. But it could, you know, and to that point.
What was the 6th? Was that Friday?
Yes, Friday the 6th.
When NFP came out, we dropped harder in one 4-hour candle and then came all the way back. So
SPX, are you looking at SPX?
Yeah.
So the 6th was, so non-farm was not the 6th, or was it? Non-farm was last Friday, right?
Right.
Okay, so non-farm, that's 11. Non-farm was right in here. So this would have been, so I'm looking at the SPX 15-minute time frame. There's your, oh fudge, I need to go to a futures feed, I guess. Where's non-farm from Friday? Over here. So here's your non-farm candle. So we had this big non-farm news. I mean, it's interesting. Look at non-farm, kind of did the same thing. We had this initial jump on the ES feed. This is non-farm last week. We jumped up, pushed up, but we faded off of that for the rest of the day. That's kind of crazy. And then I don't know, the same thing kind of today. It's like we reacted initially at the 8:30 news, and then we faded up just above that, and then it's been tanking ever since. So I mean, this tone, and what we had on Monday, like those tones seem to be what the market's doing right now. So here's what I'm going to say, man. I don't like trading, emotion or feelings. Like you can have a hunch, but part of me is like, so what are you going to do with that? Because like right now, I don't feel great about like putting in a bull put spread down here. You're already upside down in a bull put spread. I don't know if the IV has climbed enough to maybe put a bear call spread or even a butterfly. I'm gonna see what this looks like on the Nasdaq. So if I did this above today's high, I doubt this is worth anything today. But 18,887. Let me check something here.
It's probably not.
It's probably not worth anything. 18,887. 887.
The trade that I had in this morning is now worth 5 cents.
So I could get $3 credit if I want to tie up $330,000 of buying power. So that I got that going for me. If I did, let's go 25 points wide, I can still get 73 cents tying I can make some income today, man. I'm pretty confident we're not getting back to that high. If I go 25 points wide, that's fair. What is that? Hang on a second. What was that? 70 cents, 70 to 90. So that's more. Okay. So I can make about $1 today. That's a 96% probability right now. I'm going to take this trade, 18,887. I mean, obviously I could regret the heck out of this. Okay. That's a stupid trade. If I am wrong, if somehow, this thing rips back up in a big way, like I'm going to risk a crap ton of money just to make, 90 cents or $1. So here's what I'm going to try to do. I don't know if this will work, but I'm going to try to put in a call butterfly and 887. Let's move this down. So 887. That'd be my pin price. That'd be my strike. Dadgummit. So I could take that trade for 30 cents income, have a profit trap in case we hit 887. That'd be all the way up here. Actually, 880. 880, 875. Skip. So that's not too bad. I could tighten this up. I could still make maybe 35 to 40 cents today, which I know isn't a lot, but I think that's a pretty safe income play and still have a profit trap on this. This is NDX. That's not bad. Make 68 cents. That's risking a lot more. You go a little bit wider here. So that's 15 and let's go 30.
Is this above price?
Above price. I'm going to do a broken wing butterfly with calls, and I'm going to try to get 30 cents on this. Yeah, let me see if I can take this trade. I'm going to
I
go.
thought you were the one telling me fighting for 30 cents in a trade is.
But it's a profit trap, bro. It's not a credit spread. If price comes all the way back up here, Frank, I'm giving myself a chance to make $1,500 right there at the highs. I take that versus a credit spread.
But how far apart are these?
I'm only risking I'm risking $1,400. Look, the trade is not because I'm making 30 cents credit. The trade is because I'm giving myself a profit trap to make over $1,000. That's my trade. So I'm taking it, dude. I'm gonna try to get 35 cents right now. Let's go. All right, give me 30 cents, please.
I don't know. That's pretty hypocritical of you.
Oh, is it really? Listen to this guy.
Fighting for 30 cents here.
It's not about the 30 cents though. It's about the profit trap with the broken wing butterfly that gives me a chance to make $1,500. Do you see price finding a way to blow through today's high? I don't.
No, but
that's why I'm taking the trade. So it's not getting me filled at 30 cents.
Essentially, you are just going for that 30 cents then.
Your mom's going for 30 cents.
Well, what is it?
I'm kidding.
25 now.
I'm going to take 20, dude. Yeah, I'm taking 25 cents.
Might as well.
Might as well. I might as well take. Let's just pay commissions, make it break even, huh? All right. I'll let it pen. I'm going to let it pend for 30 cents. Okay. I'm going to do this. I'm going to let it pen for 50 cents. How about that? I'm going after 50 cents today, but it's for the profit trap potential. So I'm going to let this pend. It's a 0 DTE. If price comes back a little bit, cool. I'll get this one filled at 50 cents.
Okay.
So
that's a little better.
That's a little better, he says. Okay. All right. It's a wild trade. This would be, so it's an 8. Let me see where I put those strikes. That was a 18,890. All right, I'm going to throw this in. If anybody in the Pulver alert section wants a piece of this is an index trade. Let me share this chart. So 18,890, 18,890 sell, call. And then I did, let me check those other strikes. 18,875. Buy call and 18,920. I think that's what I did. Yep, 18,920. Oh, fudge. Darn it. 18,885. Sell call. And then 18,875. Buy call. And then 18,920. So it's 10 and it's 30. Yeah, or 15 and 30. There we go. So 18,890, 18,875, 18,920. Buy call. This is for 50 cents credit. So broken wing butterfly. 50 cents. So it's a $50 tail credit, $1,500 max profit in the profit trap, and the $1,400 max risk. So it's a little unconventional. I might not get filled on the trade at all, but for $50 today, I'll take it. If I see price oscillate and give me a fill on that, great. If not, So I'm gonna say I would issue the trade. But it's 11 o'clock. We're live, and this trade, if it continues to push lower, if Nasdaq continues to drop, there's no way this trade is going to get filled today. So I think since we're doing it live here, it's a little trade I'm throwing out there. If it works, great. I get filled at 50 cents. It's trading right now at 30 to 35, but that bid ask must be pretty wide. I've got $1.30 to 30 cents to 75 cents. We're a little wide on the bid ask, but yeah, I'll keep it there at 50 cents, man. We'll see what happens.
Yeah. Well, hopefully it does come up for both of our sakes. But
yeah, I agree. I'm going to take. Let's see.
Just roll with it, I guess.
Sure.
I have
pending.
Puts in play too, but we are.
Do we have to go? Oh man, that was fast. All right, I'll throw this in. I'll throw this in my alert section for the Discord, just in case if it cancels, I'll make an update and I'll edit the post. But that was fun, dude. I like you calling me out in this trade, calling me a hypocrite and everything.
We got to keep it real here, you know.
That's right. That's right. Okay, cool. Well, the big thing I'm watching is this too. I do want to watch this ES trade because if we do get into that profit peak, right now showing 720, so I'm profitable on the trade by about $1.20. But part of me, so it's interesting. Like Frank, you're kind of cheering on a move to the upside, and I'm kind of cheering a move into the downside because I'd like to see if I can get to that profit trap and turn this into a big fat profit today. So may the best man win.
Hopefully we both can somehow.
Yeah, somehow. Well, if it pops up for you to like kind of mitigate and take your day trade loss, and then it fades back down to Friday's low for me. That's what we need. Cool. Okay, man. Thanks for being with me. Let's do this again tomorrow.
Yep. Sounds
all right.
good.
Thanks, Frank. See ya.
Thank you.
Bye.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Welcome to the 11 o'clock segment of the A1 Trading Show. Hopefully you guys can hear me. I'm pretty sure I'm all set up and good to go. If you're having any problems hearing me, go ahead and drop it in the chat and let me know. All right, so as far as what I'm looking at today, right now, I would have loved to have grabbed a scalp in this area here, buying it up, but I didn't get the opportunity. I'll show you exactly what I would have been looking for here. I was waiting. So you can see this bit of head shoulders pattern that we have playing out here. Shoulder, head, shoulder. I was being a little picky, didn't necessarily want to get in right here just because we started to reject this shoulder. So I wanted to see another head and shoulders pattern form here where we have this shoulder, head, shoulder, and I would have loved to have gotten in here. However, did not get that opportunity, so this trade is gone without me. At this point, there may be some other opportunities that are coming down the line. Let me go back to the 5 second here. So this will be the next little scalp opportunity that I'm looking at. A couple ways could potentially take this. What I like to do is identify areas like this on something like the 2 minute, the 1 minute, where we've created a bit of structure. And then obviously, you know, if you guys have been following me when I pop up on this show every week, you know that my favorite pattern is the head and shoulders pattern. Now, this will be a reduced risk trade because I don't have the best reasons in the world to take Nasdaq long. I'd much rather be on the short side of this. But the trade idea is pretty simple. Actually, this would be a decent area to get in. Too big of a rejection candle for me to want to jump in now. Yeah. So what I would prefer to see is something like this. We pop up, touch the top of this structure here, pop back down, and then we get some rejection in this area on the 5 second. That would be my ideal scenario. And then if we're getting decent rejection in this area, decent little bit of structure on the 5 second chart, then I'll just quickly scalp it out of this into this little leg, with the potential for us to reverse at the top of this area here. Now, this is all technicals, because the CPI data this morning came out in a way that tells me we should have been discounted on price on the Nasdaq after that data released, and we had this bit of a funky whipsaw bit of price action here, which to me makes perfectly good sense. The data this morning wasn't incredibly uh, ground shaking; it was sort of mediocre. So, um, with a bit of a mediocre print out of CPI, this makes sense. But with the CPI leaning warm-ish, this also makes sense. Now, as far as whether or not it's a sustained move to the downside, that I don't exactly. Um, I'm not a big believer in the rest of the day we're going to experience a sell-off. I kind of anticipate something like this where we're messing around in this area. Maybe we pop back down to these lows, pop back up, and we sort of just. I think Nasdaq has potentially gone as far as it's going to go south today. Um, Now that's not. It's not to say we can't break and hold below these 18.5 levels, 18.6 levels. I just don't necessarily. I don't think the data that we got today is going to be enough to do that. Um, so my anticipation for this for the rest of the day is that we will hang out somewhere in this range. The other approach sometimes that I like to take is this initial hook into the shoulder. So we haven't touched the neckline of the shoulder, the top of this left shoulder, but we've come in and now we're about to potentially hook into this shoulder area, this price level. And then from here, bounce up, touch the top of this area. So, how would I get in on this? I identify this potential opportunity on the 30-second, and I come over to the 5-second, and I want to see something on the 5-second that gives me a reversal indication. So, for me, right now, a potential decent opportunity is going to be this push into here, a hook, a retest, and a push out. If we get some rejection, which we are. It's tempting to get in this, but I'm also live and don't necessarily want to try to be hyper scalping while live. How those could be a decent opportunity here. All right, so let's go ahead and jump over to the Doxy and see how that's faring currently. Doxy holding some of its strength following the CPI print. Granted, it does look like it's stagnated here at this 101.75 area, which makes sense. And again, my follow-up idea for CPI with where price is at now, moving into the last hour of London session, I could see, and with the muted data that we got, I could see this. I could see price hanging out in this little flag for almost the rest of the day. Even if we slightly break to one side or the other, I could see it just kind of not really being able to identify a solid continued push in an upwards direction or a real solid fade of the CPI reaction. So as of this point in the game, I'm seeing consolidation everywhere. But the way that I trade on these incredibly lower time frames means I can take advantage of that consolidation because I'll be grabbing little legs like this, like I was just explaining on NQ. Now, granted, I could call it a day. I've had a pretty good morning this morning. just grab something out of this little section here. Bro just buy US 30 right now to 42.55. Let's go check US 30. To 42.55. Yeah, I mean, it's pretty much, how long ago did you say that? 11:12? Well, about a minute ago. I mean, that's pretty damn close to where we're at. I got that message right in here at 11:12. I mean, that's a tough call because I don't really have a reason to be buying Dow in this area. Similar, a little bit of price action as Nasdaq, but not as clean on the structure side of things. But good job, because that trade is almost a TP if you got in on that. Are those low time frames consistent? Yeah, so the thing about price action trading when you're just trading off of technicals, like the reason why I trade these lower time frames, it's twofold. One, when I'm trading data releases, I mean, I'm getting in within 10 seconds of the data releasing, 10 to 15, depending on how the market's reacting. So that's strategy one. My main strategy is trading the difference between where price is at before data drops and where it recalibrates and adjusts to if we get surprise data. So that's way one. Way two is technical analysis on these lower time frames. And the reason why I trade these lower time frames is because I like to know really quickly whether or not my idea is right or wrong. I don't like to sit in a trade for really anything beyond 10 to 15 minutes. It's not, I don't like doing it. I'd rather get in on something like, let's say we're at the top of this range here, the top of this shoulder range that I was talking about. If we got a solid enough rejection here, I might throw in a 0.1% of risk from my account off of this. It's a price action only really reason. There's no real other catalyst or things happening in the world that's making me go, I want to sell in Q from here. It is purely a price action trade. So when I'm trading pure price action, I lower my risk. And yeah, as far as consistency is concerned, when it comes to price action, it's just price action is fractal. So the patterns that play out on higher time frames also play out on lower time frames. It's just a matter of how long is that trade going to take to prove your idea right or wrong. For some people, trading on this smaller time frame is way too stressful. They don't want to do it. They don't, oh man, price is moving way too fast. I just lost 0.1% of my account within 30 seconds. This scares me. I need to not be in this. And I get that. It's completely fine. I pay a little bit more attention maybe than others do to, when we're coming up on major time changes, like from 11, like if I was looking at a trade at 11:45 or 11:14 in 10 seconds, and it's setting up perfectly in the pattern that I would like to trade at a area of resistance, but it's coming up on that new 15-minute candle, I have to be aware of that so I don't get caught out as that new candle drops. Because when new 15-minute, even 5-minute or 30-minute candles drop, it can get really funky. Price action can get really funky. So you want to be aware of that. It's almost like if you're trading on higher time frames, being aware that in the next 42-ish minutes, 42 minutes from now, a London session is going to end. And that 12 o'clock candle, there could be some volatile spikes as soon as that 12 o'clock candle drops. So you need to know that if you're trading on like the 1 or the 2 or the 3 minute. It's the same thing with trading on these 5 seconds, 15-second charts. you need to know when the next major time is about to roll over. Not because it's guaranteed that there's going to be volatility, but because if there is volatility when that time drops and you're in a technical only position and it goes against you, it could go against you really hard, really fast. So you just want to be protected. Um, and so for me right now, a prime opportunity that I am looking for um, would be selling this off of a right shoulder if we get the proper indications. And it would look something like this. Let's see. In an ideal world, it comes up and taps into these highs here. And we set our stops a little bit outside of this head. And we go for, a nice little 1-to-1 or a 1-to-2. 1-to-1, I like to go for 1-to-1s and close out partials. And once I hit that 1-to-1, I close out partials and move stops to break even. If it comes back up and tickles my break even stops, maybe pops up above it, but then gives me another rejection, I'll go in with another small bit of risk, same stop area, same targets, and then if it never comes back up and hits my break even, what I tend to do is just let it ride, create these lower highs, boom, move my stops, creates lower highs, boom, move my stops, and then eventually I get taken out. But yeah, to answer your question, absolutely. It's just as consistent as any other time frame. It's just a matter of knowing if your idea is right or wrong within 30 seconds to a minute, or knowing if your idea is right or wrong within 5 minutes to 30 minutes. That's the only real difference. So yeah. I like the 1 second chart in 1 minute. Usually I can detect really good entries. That's awesome. Yeah, 1 second chart is cool. I like the 5 second. I hang out on the 5 seconds, pretty much the lowest I'll go. And I like to identify the opportunities based on like the 2, the 5, the 3, even the 1 minute. This is a prime area right here. And if I wasn't live talking through these ideas, I likely would have gotten in up here. It definitely adds another layer of like performance challenge when you're like live trying to scalp this stuff. So I'm probably just gonna um, fight the FOMO here a little bit, the fear of missing out on this trade, because this could be actually a pretty decent trade here. But I'm gonna fight that so I don't make any mistakes while trying to present and trade at the same time. So, but yeah, that's basically how I would trade Nasdaq out of this area, how I like to trade when I'm scalping price action. And let's see, what do we have coming up this week for the rest of the week? We got the Euro ECB meeting, PPI. Probably not going to trade PPI. Tomorrow I'm going to focus on the Euro meeting. That's basically it for the rest of the week. Data recently has been a little lackluster. And if you guys know anything about this and you want to correct me in the chat, feel free to. But I'm having a bit of a challenge right now with the doxy on a larger time frame kind of approach, because my concern with both of the presidents that we have potentially, either one of these two candidates, whoever wins, it doesn't look like it's going to be good for the inflation side of things. If I'm wrong, please correct me. But I'm pretty sure either way we go, if we get a Trump victory, inflation in the short term at least is going to suffer. If we get a Kamala victory, inflation in the short term is going to suffer. And I say is, has a very high likelihood of suffering, I think, under either one of these candidates. So if inflation's going to suffer, it's interesting because that sort of challenges the softening economic data that we're getting, that's leading the market to price in so many cuts. So it's sort of like this doxy bear idea from the economic data is getting challenged by the geopolitical tensions right now. It's making projections on the doxy a bit challenging. Nowhere said I have a question. Go ahead and ask your question. Feel free. Shashi said, after reaching your desired place, what things you look for before placing a trade? So for me, most of the time I'm looking for price to enter a certain area and then give me a reversal indication. And the stronger the reversal indication, the better. Like for instance, this trade right here, this would have been a decent trade, but it would have been even better if price had tapped up into the high of this shoulder. For me personally, I would have liked to have seen price tap into the high of this shoulder, reject it, tap maybe again, reject it twice. If it's rejecting it twice, cool. I'm willing to go ahead and allocate a little bit of risk to this idea, not just because it's making a head and shoulders, but because it's making a head and shoulders at a point of at a very important point in price action. We see this big drop out of this area. Price tried to rally, couldn't even meet back up in that area, and then eventually dropped off like crazy from this zone. So this is a very high impact price level. We look for a reversal pattern at this price level. Now, on the 5 second, we get this head and shoulders. Maybe on like the 1 minute or the 2 minute, we get some sort of a evening star pattern or something. I mean, you kind of have a bit of an evening. You definitely have an evening star right here, where price pushed up, gave us this doji, and then closed more than 50% of this candle here in the downside direction. But at this point, the trade is already gone for me. But it's just an idea of another kind of pattern that I like to look for. My main patterns that I like to identify are head and shoulders and like evening or morning stars. Those are my favorite patterns at points of contention, I like to call them. Points where price reacted heavily on a bit of a higher time frame, even if it's just something like the 1 minute, because I'm trading on the 5 second. So any sort of strong reversal pattern in this area, it's good enough of a signal for me. Now, again, I'm scalping the 5 second. So if we get price, now price is coming into this area, arguably you could draw a box here. And potentially enter early as it taps down into this zone. If this goes from here, I'm going to miss this trade. It's just, it is what it is. I'm not comfortable entering at this level because again, I'm trading on the 5 second. I would prefer for price to come down into here, give me a double bottom, give me a head and shoulders, give me a nice wick, retest again, rejection, head up, and pretty much just looking for a rejection of this price level in the direction that I want to take my trade. That's all I really look for. How would you know when the market is going to reverse? So you never know. You know, that's one of the basic principles of trading psychology is you don't know. You never know. That's why you manage risk. You can identify areas where there's a higher probability, but you'll never know for sure. Like there's never a guarantee. So you always want to protect yourself and not go in too heavy on any one trade. But you identify areas. For me, it's based on where has price reacted from before in a massive way. So price reacted from this level in a pretty intense way after tapping here. Price tapped here and then moved all the way to this zone from here. This is the last major high before this big leg to the downside. That tells me there's a massive price. I don't know if you want to call it mechanism or there was action here that was sustained. And so when price moves back to an area of sustained price action, I am going to be looking for another opportunity to take trades out of that area. And that's basically the way I like to trade. Support and resistance. When it comes to technical analysis, like for me, what I've found, been in the markets for 7 years. I know I have a lot of lines and stuff on my chart right now, but this is much simpler than I've kept it in the past. A few years ago, I may have had EMAs and all sorts of other things on the chart. Now, there are times where I will pull out a fib. I like to pull out fib levels from time to time and utilize those in some of my technical entries. But technical price action trading is really a function. I think it all boils down to tape reading. You've got to spend time tape reading. I've got 7 years in the market, and out of those 7 years, I think there's like 225-ish days, trading days a year, maybe more. I've probably spent at least 200 of those every year for the last 7 years, 200 days a year, like watching tape reading for at least an hour, much more than that. But, at least averagely across every single day, it's probably been at least an hour. So you come to be able to tell the story of price via tape reading, and then you're able to identify really high probability opportunities via tape reading based on that experience. So it kind of snowballs. In my experience, it is all snowballed over years of practice and watching price and seeing how it moves. And I'm not one of those people that thinks that, like, when it comes to the 5 second, I think you can find an opportunity basically across any asset. Now, I will say with futures, it's much easier to trade these incredibly low time frames because the spreads and commissions are so low, so you can afford to trade these super low time frames. Back when I was just trading Forex with like CFD brokers, the spread would not allow me to trade this way, which this is my preferred way to trade. There's a book called Thinking Fast and Slow, and it sort of illuminates you to some psychological ideas behind people that are able to think fast, or people that think, they process things better when they think slowly. I'm a fast thinker. I'm very much, I have an idea. I want to execute on that idea, and I want to know whether or not my idea was right or wrong very quickly so that I can move on to my next idea. And it's always little layups, never going for home runs, never saying this idea is going to make me $1 million. It's like, no, this one idea might make me a few hundred to a couple thousand. And that's it. A max. I'm not swinging for the gates. And a couple thousand is a really good, strong idea that ended up blowing way past my targets. For the most part, it's usually under 500. So never going for the Hail Marys. I don't trade that way. I go for these little layups. Cool. We got this head and shoulders pattern at a point of contention here. Sell it out, grab a couple $100, move on to my next idea. Okay, my next idea would have been to look for another reversal pattern down here in this zone, grabbing hold of this right shoulder. Never got that, so cool. Now I move on to my next idea. Well, my next idea right now, it's a little lackluster because I don't necessarily love trying to trade again out of this area. But if we can get another head and shoulders pattern on right here in this area, there's no reason why I can't take it for a little scalp to these levels, maybe these levels here. So that's why I trade the way I trade when I'm trading price action like this. Lets me know real quick whether I'm right or wrong, and then I move on to my next idea. I find scalping FX to be much more difficult than QQQ, less inertia. Oh, for sure. Yeah. So scalping currencies, when I'm price action trading, I prefer to scalp something like Nasdaq or QQQ or SP, like some of the equities. 110% is way better. Now, what I love about trading currencies, when it comes to equities, there's a little bit of a mental buffer for me when it comes to how I process how economic data affects Nasdaq. Nasdaq being my preferred equities. So if we get a piece, like let's take CPI this morning, for instance. CPI drops, and let's pretend it came out incredibly hot, just floored it to the hot side. Inflation is scarily high off this last print. Plain pretend. I know for a fact, or not for a fact, but I'm really confident in the fact that the Doxy is gonna go bullish. So the currency is gonna go bullish. I'm very confident in that fact when CPI comes out hot. And I'm also confident in the fact that I can pair the Doxy against maybe a weaker currency, like, or not maybe necessarily a weaker currency. I could pair it against a weak currency if I have something like this morning was a perfect storm, pound weakness based on the GDP information out of the UK this morning. So we had pound weakness from GDP figures, combine that with hit my mic, combine that with strong CPI, it's a perfect reason to scalp the British pound. It's the lowest hanging fruit. The price has to recalibrate as new data hits the market. I'm going to take advantage of that real quick on the currency side of things. But if I'm just trading price action technicals, QQQ, or for me, it's NQ all day on the futures market. Way more movement, better. I don't want to say better opportunities, but more opportunities. There's more price action. There's more chances for me to get in on a decent entry. So yeah, I prefer that as well. What do I think about bot trading? I think at some point in my trading career, if I can willpower my way through it, I will be learning how to code bots, like write scripts for trades. And as long as I don't know if that's allowed in futures, I'm pretty sure it is. I have to double check. But it's incredible because there are certain trades that I would love to be able to program. Just ideas that I've had over the years, where it's like, I want to take this one specific trade at this one specific time every day over the course of 100 trading days. But I know I'm human. I know I have life responsibilities. I'm not going to be able to trade that like a robot. So there are times, and that's just one minute example of a time where a robot would be an ideal opportunity to trade. It would never fully replace my trading because I am a discretionary trader. I like to make my own decisions. I trust my intuition about a lot of trades. But to be able to add in bot trading, absolutely. I think it's an incredible tool for traders if you can learn how to. There's a prop firm, like a real life prop firm, not to crap on prop firms, but the prop firm, as it has historically been known prior to the last 10 years, as a actual office space that you walk into on Wall Street, right? There's a prop firm called S&B Capital on Wall Street, and part of their training program is, or it used to be, I don't know if it still is, but at some point in time, the last time I looked, they had 3 routes that their traders could go. You could be a discretionary only trader, you could be an algorithmic trader, or you could be a hybrid trader. I've always thought that's incredible. They have their guys come through their training program, and you can choose. I want to focus solely on discretionary trading. I want to focus solely on building out scripts to take trades automatically for me. Or I want to focus on a hybrid approach where I take some discretionary trades and I also build scripts, write scripts to get me in and out of trades automatically. So yes, very, very emphatically a supporter of bot trading. I'm not a huge supporter of buying somebody else's bot, simply because I like to approach the market with my own ideas. And I think as traders for the long term, you want to work on that muscle as much as possible to build yourself up as a performer. This is a performance sport. Trading is 110%. It comes down to me managing my account. That's it. That there's no other, not that no other factors come into play, but ultimately, anytime I'm exposing myself to risk, I have decided to expose myself to that risk. So it's a performance sport. It's all based on my performance. So with that in mind, I don't want to go buy somebody else's thesis for trades and then win off of those. But then all of a sudden that thesis doesn't work anymore and I have nowhere to go because I didn't develop the thesis. So I don't have that muscle of developing the idea. So all about learning how to code and script and write your own bots, 110%. I'm not about buying somebody else's bot. That to me is it's similar to taking signals, which I'm not a big signals guy. I'm not, I'm certainly not going to knock anybody that does signals, but again, it's a build that independence muscle. If there's a good signals provider or even maybe a good bot out there that you want to buy, for sure. Again, it comes down to you. It's your decision. It's your trading. You have to decide what is best for your account. But personally, my bias would be if you can have a hand in the formation of the idea, if you can have your hand on the wheel per se as you're building out a bot, I think that's your best bet, because then you can adjust the bot to fit different parameters if it's performing well or not performing well. You can build other bots as new ideas come up. So yeah, big supporter of bot trading. Yeah, you would need to code if you know how to. You would need to know how to code if you want to create your own bot. Absolutely, yeah. So that's what I was saying before is. At some point in my career, I would love to I'd love the idea, I should say, of setting aside time, like, 9 months to a year. If, it might take longer than that. I don't know, to learn the script building, the code building, things. I started to teach myself back in 2019. Like I started to learn how to code. I taught myself how to code within like 100 days. There's like a challenge in the coding world, or there used to be, it's called like 100 days of code. And you can, over the course of 100 days, you can get pretty good. Like I knew nothing about programming. And then at the end of 100 days, I mean, I could build websites and scripts from scratch. It wasn't in the language that I needed for trading bots. That's a completely different kind of coding. But I think if I set aside the time, I could do it. And anybody, if you're maybe not anybody, but I think if you have the wherewithal to understand price movement, calculate numbers, do more than maybe just draw lines on the chart. If you can, identify, statistical advantages to certain entries and things like that. I think if you have that level of intelligence, it's really just a matter of putting in the work to learn how to code in order to build your own bots. At least for me, I consider myself to be of relatively average intelligence. And I'm like 99% sure it's just a matter of actually going, okay, over the next 90 days, I want to learn how to program a bot. And that bot is going to be super simple. It's going to get me in a buy position. I'm just making something up for a silly scenario. I would not actually build this as a bot, but let's just say it's a great example. Comex, I believe they open up every day at 8:20 a.m. my time. And, just for, again, craps and giggles here, let's pretend at 8:20 every day, I wanted my terminal to get me in on a gold buy to take advantage of the Comex open. Terrible idea, because it's, just because it opened doesn't mean it's going to actually buy up, but just to play pretend. that would be a relatively simple place to start. So right here, 820, market opens. I want to immediately be put into a buy position and maybe taken out within, we'll call it 10 ticks or 10 pips. That would be what I would think would be a relatively simple bot. It's, again, I don't know exactly what I'm talking about because I've never built a bot, but the idea would be, okay, this time triggers for the bot. The bot triggers a entry position, risking, a tenth of a percent, and it gets me out within 10 ticks either side. I'll go for a 1-to-1, and I'll call it the COMEX open bot. And every day at 8:20, regardless of whether or not I'm awake or asleep or uh, at the beach or at my mom's house or whatever, at 8:20, my bot is automatically going to get me into that trade. Could be a cool little thing to build out there. All right, let's see. Nick starts some real talk and people leave the stream. It is what it is. Project and anticipate. All right, guys, got a little long-winded this morning talking about a bunch of random stuff, trading bots and all sorts of stuff like that. Yeah, so like I said on Nasdaq when we started the stream, I don't see us making a continued sustained downside move. I see us kind of hanging out in this area for pretty much the remainder of the day. Now, this is a pretty decent little push back into this zone, but I could see this being a search for equilibrium. The market sort of looking for that. I mean, it's almost back to where it was trading before CPI dropped. And again, CPI came out slightly warmish, but kind of mixed. And I think we're seeing a pretty typical reaction off of the kind of data that we got. So you have this initial spike from that hot CPI. Market's like, are we really sure about this? And it's like, oh, yes. New York Stock Exchange volume comes in. Yeah, we are sure about the fade. Oh, well, are we sure about this much of a fade? No, probably not. And now we're just back at equilibrium, trading where we were before the okay-ish data dropped. So yeah, I don't expect a ton more directionally out of Nasdaq today. But if you're trading on lower time frames, I mean, it's not a bad area to start trying to look for sell scalps, but it's not a great area either. I think for me, a good area would look like this 18,825-ish. Right in here, kind of at this, you got resistance, support, resistance, pretty strong area. And if price wants to tap back into that zone and give me a reversal signal on the 5-second, 15-second, I absolutely would love to sell it out of there, at least back down into these lows here. But all right, guys. If you don't have any more questions for me, I'm gonna go ahead and call it. Jacob said we could see Nasdaq become green. Yeah, I mean, that's definitely not out of the equation. Like I said, when it comes to Nasdaq and the impact that CPI or other economic data has on it, sometimes I feel like the nuances of that do escape me just a bit. Meaning, like I know there's the general ideas, but it's not as intuitive for me as like currencies are. So as far as how the CPI data today affects NQ, I want to say it should make it a little bit of a challenge for us to have a green day on Nasdaq. But the markets could prove me wrong on that. Absolutely. Yeah, Jacob said currencies are hard to trade. I failed so many times. So yeah, for me with currencies, like I said, that the best opportunity I've ever found in 7 years of trading currencies has been the um, it's kind of, I've kind of like coined this a recalibration term, like and it's super intuitive to me too, because when economic data drops for the US, it is going to have a direct impact on the US dollar, right? Most of the time, it should. If it surprises the market, it should have a direct impact on this. So let me see if I can pull up my trade triggers here. This is how I tend to. This is how I approach data ahead of it dropping. GBP, we'll take the pound data from this morning for GDP. So we have the forecast for GDP. We have the previous numbers for GDP. We have the low of the forecast range from the major financial institutions, and then the high. Now, I set up two potential scenarios, a contractionary scenario and an expansionary scenario. There is a third and fourth scenario that I can talk about in a second. Expansionary scenario out of the pound for this specific data this morning would look like every piece of data coming out above the high. So we want the 3 month over 3 month, the quarter over quarter GDP to come out above 0.6, the month over month to come out above 0.3, the year over year to come out above 1.5, again above these highs. Same with the services month over month and the services year over year. Now, vice versa for the low, coming out below the lows of the forecast was acceptable for a trade, but there are some of these where the previous is lower than the low estimate. So take, for instance, month over month, we have the previous of 0.0 and the low of 0.1. Well, if it comes out at 0.0, it's going to be the exact same as the previous. Below 0.1, it could lean contractionary technically, but it's not like I wouldn't consider that a surprise. Now, if we had a negative 0.1 hit the actual, that's below both the previous and the low, good to go. That's a surprise print for the market. Same thing with estimate year over year. The lowest projection was 1.3, but the previous was 0.7. So if we got something like 1.0, it's sort of like a toss-up. It's like, well, it's lower than the expected, than the lowest of the expected range, but it's still warmer than we previously had. So there's a bit of growth compared to the last print, but not as much growth as would be expected. That's a little muddy, right? And so when things get muddy like that, it can be a little difficult. But basically, I set all my ideas up exactly like this. All of the data points that are coming out, and then when it drops, then I can take the trade. So this morning we got almost everything we needed for the contractionary side of things, and then it's very simple. If you look at the pound, I took this trade this morning off of the pound data, and then when CPI dropped, we had weak pound going into this was a little bit of a cheeky entry. I'm not gonna lie to you guys, a bit of a cheeky trade on my part, taking this this New York session pound sell off of CPI data. I took it because you're about to see my favorite pattern: shoulder, head, shoulder. I actually got in over here after we rejected this shoulder. Stops above the head, and I took it to this low right here. So that's the way I trade currencies. It's very simple, very intuitive to me. Inflation comes out hot. The central bank is going to be tempted to raise rates. Inflation comes out cool. It's going to lean in a more dovish tone, and I get in directionally based on that kind of data. Are you a fundamental trader or a technical one? I'm a blend. The way that I trade is when I have two strategies that I trade mostly. The first one is it's a hybrid blend, fundamental bias, technical entries. Perfect example being right here. My fundamental bias going into this trade was built off of two ideas. One, we had the pound weakness out of the GDP print this morning. Two, we had dollar strength out of the warmish CPI print today. So price did this initial whatever this is, and then I wait for a decent technical entry. I have my fundamental bias. I'm looking for pound sells. Now I'm looking for my opportunity. Okay, so price came in here, nothing yet. Oh, okay. Well, we've just made another higher high. Maybe, yep, sure enough, we came down here. Now, are we going to get this right shoulder? This is the moment where I start identifying that an opportunity may be about to present itself. Okay, price comes back up into here, pushes through pretty strong, and I'm like, it might not go. It actually might pop back up in here, maybe do a double top, and then come over here and give me a right shoulder. Or it's just going to come up, blow past this high. Maybe I'll look for another head and shoulder opportunity over here if we get it. But basically, the idea is fundamental bias, technical entry. I got my technical entry signal once we rejected this right shoulder, jumped in, stops above the head, and I took partials off at 1-to-1 and then let runners go to this little line here. So yeah, a bit of a blend. Do I think the euro is short-term bearish? Personally, I don't have a good answer for you, and I don't like to give an answer when I don't have a good answer. I think fundamentally, I'm a little out of the loop on the euro. I don't have, off the top of my mental Rolodex, I would have to search through some data and refresh my mind on what's going on, which I need to do anyways because we have the Euro Central Bank meeting tomorrow. But I don't want to give you an answer to that just because I don't have a real solid answer for you. So yeah, I'm gonna skip that question, and I can come back to it on Friday. If you're on the show Friday, ask me again. I'll be on at 11. And at that point, we'll have traded the ECB tomorrow, and I'll have the euro freshly on my mind. All right, guys, I think I'm reaching my time limit here, so I'm going to go ahead and call it. From everybody here at the A1 Trading Show, thank you for showing up, and we will see you on the next one.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.